Coming up on Business Incorporated. The Supreme Court nullifies the federal government's policy and orders that the 200, 500 and 1,000 naira notes to remain in circulation till December 31st, 2023. And Kenya's private sector activity contracted in February, weighed down by a steep weakening of the shilling and inflationary pressures. Egyptian President Abdel Fattah el-Sisi announces a package of measures including state wage and pension raises aimed at easing economic pressures. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening in markets starting on the African continent. We see there, as usual, the NGX always either up or down marginally. It's down 0.05% today, the trading session at intraday this Friday. South Africa's GSE index, that's at 78,256 points, farther away from the 80K level, but it's up 0.91%. We're seeing a recovery there. Let's move over to North Africa now. We see Egypt, the EGX 30 down 1.61% to close yesterday, and Kenya 126.21. That's the all-share index. It's closed up 0.26% yesterday. Let's move on to the Middle East now, where it's mostly mixed sentiments there. Just for intraday, that's in the UAE. Abu Dhabi index up 0.07%. While the Dubai index, it's down almost 0.5% there, 0.42%. And we see Saudi Arabia and Qatar closing the green, with the Saudi Arabia index, the biggest mover, up yesterday to close. Let's move on now to Europe, where German Chancellor Olaf Scholz is traveling to Washington, D.C. to discuss recent kink in trade relations between the two sides. Talking about America, with the U.S.'s massive subsidy program for climate-friendly production, Europe fears U.S. plans could sap investment from Europe at a critical point. Let's talk more now to Stephen Beardsley right there in Berlin. Stephen, how serious is this trade issue between the U.S. and Germany?
Well, Europeans are taking this issue quite seriously. They have been for months since the U.S. announced and then passed this measure. After Ukraine, I would say that this is actually the top of the agenda for many European governments, figuring out what they can do about this. It's been the source of several high-level delegations going to Washington, D.C. to discuss this issue. Now we see Olaf Scholz going. This is about the Inflation Reduction Act. That's a massive bill passed by the Congress last year, I believe, and signed into law, went into effect at the beginning of this year. And it offers a whopping $360 billion in subsidies for climate-related production. That could be batteries, it could be wind turbines, solar cells. And accordingly, it acts as a magnet for companies. Now, the one big stipulation, I should add, what makes this important is that that production has to take place within the U.S. So it really benefits multinationals or companies who are setting up their production there. And that's why Europe is so upset about this. It comes at a very poor time for the continent. Energy prices are skyrocketing, and of course, there's a war in the backyard.
And how much pressure is on Olaf Scholz to get something done?
Well, the pressure is not just on Scholz, it's not just on Germany, but it's on European leaders across the board. He's just the latest to make this visit. The pressure is, in fact, growing. We're seeing more examples of firms that are reconsidering where to put their investment, especially as they look at the U.S. The latest example being perhaps Tesla, which has built out a production facility just outside of Berlin. It was going to expand its battery production there as well, but now it's moving some of that to the U.S., it has announced. That's a big deal, and it's gotten a lot of attention here. There's a Swedish battery maker that was going to build a production facility in the north of Germany. It still may, but it's also taking its time and delaying those plans as it takes a look at the U.S. Likewise, the wind industry, solar industry, they've both said that they need to have some sort of answer. Europe needs to have some sort of answer to these subsidy packages if it's going to have the capacity to build out renewables in the way it wants to. Now, the problem is that the Inflation Reduction Act is a done deal. It's signed. It's already in law. Now, Joe Biden has suggested that the U.S. can offer some sort of offsets to Europe to try and soften some of the harshest effects. But to date, we haven't really seen a whole lot.
All right, Stephen, we'll keep tracking that. Definitely a developing story there. But how are the markets looking today?
Well, the positive sentiment that wrapped up yesterday seems to be continuing this morning. Most major indexes were up. And in Germany in particular, there's some positive news that should boost investors even further. And that includes that exports were up for the month of January compared to a year earlier, higher than expected. On top of that, Lufthansa, the national flag carrier for Germany, reporting its first annual profit since the pandemic. And it says that 2023 looks to be a very good year as bookings are improving. Both of those very good signs for the German economy that's likely to put a little bit of boost in investors purchasing, selling, whatever today.
All right, thanks so much. That was Stephen Beardsley right there in Berlin. We'll keep tracking those markets. Obviously, the bulls there are looking for a catalyst in that market. Let's take the conversation forward now. We see with the Central Bank of Nigeria's decision to replace higher denomination banknotes has led to a significant uptick in the adoption of digital financial services, also with the stoppage of international payments on Naira cards, also boosting that sector too. Let's talk to Tunde Buremo, now CEO and founder at Cardify, join us via Zoom. Great to have you. So we did get that breaking news earlier that the Supreme Court, nullified the federal government's policy and saying that the old 200, 500, and 1,000 Naira notes will remain in circulation till December 31st, 2023. I'm sure some people, breathing a sigh of relief there. Maybe others not in support of this. But how are you seeing this, at this point? Because we saw the first policy there boosting fintech adoption. How are you seeing this?
Yeah, as much as the policy in itself is, a great policy to enable cashless society, I think the implementation was, a bit too rapid. And considering the population of the country vis-a-vis the unbanked and underbanked, so it's definitely that consequently there has been a surge, in the use of digital services and fintechs alike across the country. And of course, this has affected a lot of fintechs as there has been more pressure on available infrastructure in recent times.
Yeah, there's so much pressure. And talking about pressure now, any data, showing big maybe jump in sign-ups for, most of these fintech platforms?
A lot of fintechs recently have reported a surge. However, a number of factors, actually dictate how well these companies can adjust to the rising demand for their services relative to the voluminous, number of sign-ups and as well the number of transactions, because sign-up is a thing, transactions is another thing. I mean, the way users, the volume at which users get to use this platform. So one of such factors is, the scalability of their technology. Another factor is the robustness of their systems. And very importantly, the available of sufficient funding to support expansion at times like this. On the other hand, we have to identify the issue of financial inclusion in Nigeria, which is not unconnected, to the country's smart penetration, which is around 35%. So to put that into perspective, what that means is most fintech products usage is still capped at around 35% of the entire population.
So if this amount of pressure, continues, do you think the fintechs, can handle, all these users? Because today, I was talking to a friend today, and one of the fintech platforms that my friend actually had to use because of the banks were overpressured, he said that platform was beginning to fail. So I'm wondering if this continues, can the fintechs actually handle it going forward?
Yeah, I mean, it's a reciprocating effect. Like with that policy, it is definite that there will be an increase in use. However, there are more reasons to believe that fintechs are well positioned, to handle more users at this time. Firstly, most fintechs are built on cutting-edge technology, very flexible technology that can scale quickly to meet rising demand. fintechs are built to be flexible and scalable, most, of course. So this enables them to swiftly, adjust to shifting market conditions and customer expectations. Another reason is, fintechs are frequently more eager to try out new things, and business strategies. This can help them, stay on cutting edge and meet the increasing demand respective to user acquisition. And lastly, many fintechs have already demonstrated the ability to handle large number of transactions, even in the face of this rapid growth. Several fintech companies in Nigeria have already reported significant increases in transaction volumes as a result of the recent cash crunch and the recent naira thing, and they have really been able to handle these volumes with relative ease.
Okay, let's quickly touch on virtual dollar cards. Now, I know that's becoming a thing now for people that want to buy from international stores, but a lot of those platforms shut down in 2022. So I'm wondering, how is the business climb for that virtual card business, virtual dollar card business? How's that looking right now?
Yeah, the shutdown you mentioned, the shutdown of most platforms in Nigeria was actually a ripple effect of the shutdown of another card issuing platform. However, Cadify Africa is a cutting-edge, fintech solution that seeks to revolutionize the way Nigerians and Africans in general manage and utilize their funds. So, speaking of utilization, one of our core aims at Cadify, one of our core offerings is the virtual dollar cards you mentioned. So the virtual dollar cards can be funded with both fiat currency as well as stable coins. This is in a bid to kind of bridge the gap between Africans and cross-border payments. So we've got quite a number of use cases for these virtual dollar cards. One of them being online shopping. So this is like making payment on e-commerce platforms. We've got subscription services. This is mostly happening in a recurring basis. And so this is when users like pay for their services. The services they have subscribed to on a periodic basis. Then international transactions, global payments. So until now, payment has like been an hassle for Nigerian freelancers and tech users and enthusiasts due to several spend limits. However, codified dollar cards enable users to pay above those limits in US dollars directly. And one of the core features of this card is security. So this is where the added layer of security known as 3D security protocol comes in for our standard cards at Cadify. Basically, 3D means 3 domains. That's the acquirer domain, the issuer domain, that's the domain of the issuing body, perhaps the merchant or the fintech, and the interoperability domain, that's the infrastructure everything sits on. So when the verification across the 3 domains protocol, when it happens, that is when you normally get a prompt on your phone to use a one-time password and
all right, Tunde, but
validate a debit card.
Yeah, but Tunde, looking at that business, do you still see opportunity? With the whole dollar crunch, right now in the country, is there still entry for that business in Nigeria?
Yeah, a lot of it, mostly because of the fact that it is convenient. You don't need to carry the card around, it is accessible. So this makes it kind of ideal for the unbanked and underbanked to activate virtual cards in minutes. And it also provides a situation whereby users can budget more easily and track their expense.
Okay.
So.
All right. Well, I guess there's still a lot of opportunity with that virtual card business. Well, thank you so much, Tunde Buremo, CEO, founder at Cadify. It was great having your perspective today. Thank you.
You're welcome. Thank you. Yeah.
All righty then. So we'll track other markets right after this break now, then with other discussions with South African economy. That's next. Just stay with us. Well, Welcome back. Let's check out on the U.S. markets now. We see investors pondering on what will happen next with rate hikes in the U.S. If you flip over now, we see it's positive sentiment with the Dow Jones Industrial Average up 1.05% with stock futures today. NASDAQ also snapped back some of those gains, up 0.73. But let's get a review of yesterday's close with our correspondent, Maria Bird.
The U.S. stock market closed in the green on Thursday, as the Dow Jones was up by 1.05%, heavily attributed to Salesforce increase of 11.5% on Thursday, and the S&P 500 closed 0.76% up. The NASDAQ Heavy Tech Industries closed at 0.73% up. This was all due to the fact that investors shook off concerns of higher interest rates, despite the fact that it does show that jobless claims and a pullback was going to potentially have an increase of interest rates of 0.25%. But this is all set to not necessarily take place in the near future. So investors are hopeful that the U.S. stock market is going to begin the next quarter in an upswing.
And that was our correspondent there with yesterday's close for the U.S. markets. Moving on to our next conversation now, we see the U.S. Congress is pressing President Joe Biden to take a tougher stance against South Africa over its deepening ties to Russia and China. Let's talk to Matt Kinniger now, practice leader, Sub-Saharan Africa Front of View. Great to have you, Matt. Good afternoon.
Good afternoon. Thanks for having me on the show today.
So quite an interesting turn of events there. You know, we've had Russia with their friendly and non-friendly nations, and now it's looking most likely that South Africa may be at risk of sanctions due to the ties with Russia. How are you seeing this?
Yes, so this is something that I wouldn't have imagined only a couple of months ago, but there is increasing risk that the US will impose some kind of penalty or sanctions on South Africa because of its deepening ties with Russia. I will emphasize it is not our base case for the time being, but there is increasing risk that we will see some kind of action by the US against South Africa. To put this into context, it appears that President Biden is resisting calls from Congress to impose sanctions or tougher penalties, and this is because his presidency has really been defined, especially with relation to Africa, of improving relations or trying to improve the US's standing in Africa. So he wants to really encourage, through diplomatic channels, South Africa to sort of distance itself from Russia rather than use punitive measures. Having said all of this, if we see South Africa, or if we see very clear evidence of South Africa supplying lethal aid, military aid to to Russia, then we are likely to see Biden face overwhelming pressure from Republicans in Congress to impose some sort of sanctions on South Africa. Now, it will be quite difficult for the US to get the UK on board because the UK has a much closer political, trade, cultural investment ties with South Africa. And so the US will probably not want to do this unilaterally. But again, if there is evidence of lethal aid being supplied to Russia, then we're likely to see some form of sanctions imposed on South Africa.
It looks quite difficult, you know, knowing that both countries are in the same bloc. They're talking about BRICS. But how do you see this impacting, if these sanctions actually do happen, how does this impact the South Africa's growth outlook?
Yeah, so what I would say is that if there are sanctions imposed, we're much more likely to see lighter sanctions imposed, at least initially, and these are much more likely to be on specific individuals, so top politicians, civil servants, and members of the military in South Africa. In that case, we would certainly see a sharp depreciation of the rand, but overall, the effects would be mainly limited to sentiment. As we saw with Russia, even though sanctions before the war in Ukraine started were negative for the economy, they weren't really game-changing for the economy or extremely disruptive. However, if we were to see broader sanctions targeting specific industries such as the country's very sophisticated and large banking sector, or, for example, sanctions restricting South Africa's exports of commodities such as iron ore, then we would see very severe and lasting damage to the economy. We would likely see South Africa enter a very sharp recession. Public finances would deteriorate very substantially. So that's a significant downside risk for the country, especially because South Africa's economy is very globally integrated. One thing I would also emphasize is that even if we don't see very severe sanctions, so sector by sector sanctions imposed on South Africa, if they are just lighter sanctions, there would also be a negative effect on tourism, in our view, because European, North American tourists would be very sensitive to this development. We would also see a number of companies, especially in the West, starting to self-sanction. So there was a risk that you would see divestment from South Africa, even if they wouldn't be legally required to. So there is certainly a risk nonetheless.
Right, and definitely a risk there. But before I let you go quickly now, what's your expectations for the economy, regardless of the sanctions?
Yeah, so unfortunately, South Africa's economic growth outlook is looking increasingly weak. We have recently downgraded our growth outlook for South Africa from about 1.7% this year to just about 1%, and we are likely to downgrade this further. And this is mainly because of the increasing electricity shortages in the country. This is having a very negative impact on mining and manufacturing. Sentiment is also being affected generally from an investor portfolio perspective. But we also have very weak labor markets in South Africa. There's also a relatively muted tourism outlook. And public finances, unfortunately, are deteriorating as well in the country. There are still sectors doing quite well. Services are still performing quite well in the market. Healthcare, for example, doing very well. But overall, our base case view is that the economy will struggle to grow this year, even if there are no sanctions imposed on the country.
All right. Thank you so much, Matt, right there in the UK. Matt Kinga, practice leader, Sub-Saharan Africa Front View. It was great having your perspective, and have a great weekend.
Thank you, you too.
All right, now let's move on to all the stories now. See, Kenya's private sector activity contracted in February, mostly weighed down by a steep weakening of the shilling, inflationary pressure on consumer spending, and growing tax burdens for firms. And the S&P Global Kenya Purchasing Managers Index fell for the first time since October to 46.6 points in February from 52.0 points a month earlier. Survey respondents attributed the drop to higher import costs and after the currency depreciated and reports of tax burdens. And Egyptian President Abdel Fattah el-Sisi announced a package of measures, including state wage and pension raises aimed at easing economic pressures hours after a hike in gasoline prices came into effect. The decision includes increasing civil servants' monthly salaries starting from April by a minimum of 1,000 Egyptian pounds and raising the minimum monthly wage for state workers of different grades to between £3,500 and £7,000, respectively. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.